Ever since the election, investors have been trying to divide the whole market into
Trump stock, not a Trump stock.
Trump and non-Trump stocks. Well, so the inauguration is tomorrow. If you're viewed as a non-Trump stock, it's hard to drum up much enthusiasm. Sometimes I think the companies are misdiagnosed. Take PPG, the specialty chemical company that makes all sorts of proprietary glass paints. Coatings really is major business. Here's a stock that was already down in the dumps at the time of the election because 3 months ago, the company reported a weaker than expected quarter, which it attributed to, quote, a sluggish economic environment, end quote. In response, the stock fell from $101 to $93 in a single day. Then after Donald Trump's upset victory, investors started worrying that PPG might fall into the non-Trump category, given that PPG spent $2.3 billion to buy Comex, the Mexican paint maker, a little more than 2 years ago. With the new president about to be sworn in, people are understandably skittish about U.S. companies that manufacture in Mexico. That's part of the reason why the stock has lagged behind some of the other industrials. Still, PPG has always been a high-quality company. Not long ago, they announced a major global restructuring program that could help the businesses save hundreds of million dollars. And then this morning, the company reported a pretty darn solid quarter. PPG beat the earnings estimates by a penny, even as its revenue came in a bit light, down 1.5% year over year. Those aren't blowout numbers, but they're a heck of a lot stronger than last time around. And if you believe, as I do, that our economy is poised to accelerate, and the world's economy too, perhaps dramatically, then you have to believe PPG is going to do better. Plus, as far as those Mexican worries, the fact is PPG mostly has a localized manufacturer model, meaning they tend to make their goods in the same countries where they sell them, which is why the company has dozens of plants here in the U.S. and why their Comex business primarily sells paints in Mexico and Central America. In other words, maybe this is more of a Trump stock than you think. So let's check in with Michael McGarry, the chairman and CEO of PPG, to hear more about the quarter and his company's prospects. Michael, welcome back to Mad Money.
Oh, thanks, Jim. It's always good to be back.
Thank you. Now, I saw that you are still somewhat cautious about some of your markets. Aerospace you regard as tepid, still a decline in marine shipping. But I detected that you think that, in general, maybe the world has gotten a little bit better, particularly Europe, and that PPG is more upbeat than we spoke to last time.
Sure, Jim. I mean, the last time we talked, Europe had a little bit of a lag in the third quarter. But now we saw an uptick again in the fourth quarter. So 5 out of the last 6 quarters, we've had good growth in Europe, and that's encouraging from that perspective.
I want to emphasize, everyone hears Mexico and they freak out. You have a fabulous business in Mexico. And Mexico is a great market for paints, for coatings, and that doesn't mean that there isn't anything you do in Mexico that should necessarily make it so that the president-elect would think that PPG is moving jobs down there and not doing the right thing by the country.
Oh, no, Jim. Our Comex business is a local business. We make paint local. We sell it local. We're also the largest painter of cars in Mexico and industrial products. And those also stay in Mexico. And the ones that come to the U.S., if he wants to change production around, we paint them in the U.S. too. So we're agnostic on where the cars are made. Obviously, for us, we're number one in the U.S. and we're number one in Mexico. So I think we'll stay. And we're very happy with the Comex business. It grew more than 2 times GDP. Had a great fourth quarter, and people were worried about the start of the year. And when I look at the numbers for the first 19 days, very solid. No
that's
concerns.
Important because I think autos are a great driver, and I think that you guys are in the sweet spot for all the highest-end autos.
Oh, yeah. We paint the high-end cars regardless of where they are, and a lot of the cars that are being new plants in Mexico are also on the high end as well. So regardless, we're going to be strong either way.
Okay, so let's talk about the $2.5 billion you spent over the last few years on M&A and share buybacks. Has been up to $2.5 to $3.5 billion over the next 2 years. But the M&A multiples have gotten expensive. Can you pay up here? Is it prudent to still buy?
Well, Jim, as you know, we've always been a patient seller and a disciplined buyer. We look at everything in this space. We try to always put a multiple on it that makes it accretive to our shareholders. Mm-hmm. And so, therefore, some of them we passed on, and some of them we've been successful. In the last 2 years, we bought companies for about $400 million in 2015, another $400 million in 2016. There are more properties out there. We're constantly looking, and we're paying fair multiples. We closed on 2 small architectural acquisitions in the fourth quarter, and so there's more of them out there.
All right. Last question. You've got, with the Trump administration starting tomorrow, possible infrastructure, tax reform, have to think that PPG could be a prime beneficiary.
Well, I would tell people we have no special deals in the U.S. So if there's tax reform, it's going to be good for us. If there's infrastructure, it's going to be good for us. If there's smarter regulations, it's going to be good for us. So we don't see the downside that people are worried about. I think the stock is a little bit under pressure. Growth has been 1.7% the last quarter, but we see growth returning more consistently, and the teams are focused on it. And right now, we remain very positive on PPG, both in 2016 and 2017.
All right. Speaking of teams, is there any chance that you can beat the Patriots?
Well, I would tell you that both teams have long legacy of great performance, and we're a Pittsburgh-based company. We're going with the hometown Steelers, so we look forward to a great game and let the best team win.
All right, fair enough. Michael, congratulations on that quarter. That was much better than the last one, which I thought was terrific. It's always great to see you, sir. Thank you.
All right, thank you very much, Jim.
Okay, that's Michael McGarry, Chairman and CEO of PPG, with a quarter that I think, if the market hadn't been down, this stock was really flying initially, and I think it's a great place to be post the inauguration. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.